Hello, we're back with our series, Starting Your Own Business. I know that you can't wait for the next module, and we're going to talk about taking care of the legal stuff in this module. So please stay glued to your screens. You're going to learn a lot. I'm Catherine Young from Think Room Consulting. I think by now you should know me, but I've been an entrepreneur for the last 3 years, in corporate before that. I absolutely love being an entrepreneur, and I have the best of both worlds, I guess. I work with corporates, but I'm not quite in it, so I still run my payroll by itself, if you know what I mean. I've got a distinguished guest in the studio with us today, Tyron Nell. Welcome, Tyron. I would love for you to introduce yourself to the audience.
Hi, I'm Tyron Nell. I've been a serial entrepreneur, never really having held down a real job, just pretty much sort of finding my way through various industries. We've formed a company called Zulu to help small and medium enterprises. Our role is to really guide you along your way, sort of teach you all the little bits and pieces about owning a company, but more about me. I live in the nice, warm, urban climate where we surf and we actually chase them and the sharks around. So
chase the sharks or support the sharks? The last time you said you're supporting sharks?
Well, in the sea we're chasing them around, but on
Right.
the field, yes, support them 100%.
Okay.
So that's exactly just a little bit about us, who we are. It's fun. Just really helping people to realize being an entrepreneur is fun.
Yes.
You know?
Yes.
So that's us.
Fantastic. Darren, we really want to talk about all this legal stuff, right? Now, if my grammar teacher hears me now and she hears me use the word stuff, that would be real trouble, but bear with me. There's a lot of legal stuff that SMEs have to go through, right, in terms of getting their businesses set up. Talk to us about that.
Okay. In a previous sort of module, we had spoken about the different structures that you had
Yes.
to form your company. Now, essentially, what we'll go through now is the legal framework around that. So you've got your entity, you've set it up. What now?
Yes.
The big next thing that everyone sort of scares everyone is SARS. Our tax authority. They're like, oh, what do I do now?
That's right.
So effectively, what we'll run through is just the steps to follow in an order of sequence that you'll need. You don't have to register for everything on the first day. So you've got your entity, and now you want to go where to.
Yes.
The first thing is obviously income tax, because as you know, Caesar wants his pound of flesh.
Yep.
So the first thing you'll do is you'll register yourself and for income tax.
Right.
Bear in mind, all entities, whether you're a sole prop or a company, you will have to register and for income tax.
Let me just remind everyone the couple of entities that we've covered in one of the previous modules, if you want to go look at that, was sole proprietor, closed corporation, which we know in some countries no longer can be formed as a new organizer or a new company. We had the private company,
Yes.
as well as, what was the last one?
Trusts as well.
The trusts as well. So what you're basically saying, regardless of what format you've set up, income tax is important.
Absolutely, 100%, because obviously that's the basis of the actual system. As soon as you've registered an entity, SARS wants to now know, how much income are you making, because they want their share.
Right.
Which the way it works.
Right.
It's almost a penalty on doing well, taxation.
Right.
So the first thing you do is register income tax, regardless of the type of entity that you run, and yourself too as the individual. So if you have an entity, be it a company or a trust, you yourself have to register for income tax as well.
Okay, this is important, what you're saying.
100%.
Okay, so there's an entity, the business,
Correct.
that registers for income tax, and then as an individual, I still am also liable for tax.
Correct.
Income tax.
Correct.
Right.
So that's the first thing that everyone needs to have. Now, from there, you start moving on to the next actual stages. And the next real stage is when you actually employ staff. So that'll be the next thing. So now you're thinking, well, I've got staff members, what do I have to do? Now you're going to look at the thresholds at income tax. If someone's earning less than 67,000 Rand, this will vary from year to year as they set the tax tables, and obviously from country to country. But effectively, if you employ staff and they're earning under the threshold for income tax,
Yes.
you only have to register for unemployment insurance in this country. And
Wow. Okay, hang on. I'm really learning here. So that's another thing I didn't know. So if the staff earn below the threshold in the country, technically speaking, you don't have to register them.
No, you have to only
Just for
register
UIF?
Yeah, for unemployment insurance.
Unemployment insurance.
Correct.
Okay.
Yeah. Then the next one you'll have to then do is, once you've got staff, is you have to register for actual workman's compensation.
Right.
So a lot of people always wonder, what is that?
Yes.
And I'm sure you're about to ask
I
me.
was about to ask you.
Indeed. Workman's compensation is essentially an insurance that you pay over to the government, so that if any of your workers are injured on their duty, you might think, well, I'm an accountant, I'm a consultant, how am I going to get injured? Well, we might trip over the lights here.
Right.
We're at work.
Right.
If we injure ourselves, we can go to a hospital and it's all actually paid for.
Okay.
So
Tyrone, what happens if you don't register for workman's compensation and you run your organization? What are the results of that?
Well, unfortunately, there are lots of penalties for all these registrations. But effectively, the onus is on the company owner to register. And if they don't, there's obviously penalties in the law that you'll be punished, and they'll force you to register, and then you're going to be paying large fines and things like that.
Yes.
But it's really simple to actually register. The process is easy to run. So we always advise clients, get on board, register. Then at least you know your staff are actually covered.
Is there a fee involved in registering for workman's comp?
No. What you'll find is that to register with the workman's compensation is free, but often it might be a complicated process, or the entrepreneur doesn't have the time really, that the other pace someone.
Yes.
So you'll find that there are numerous organizations like ourselves that will gladly undertake the service,
Yes.
collect all the paperwork, hand it all, make sure it's all, so when it goes in right the first time. You're not waiting for hours to get your stuff.
Right. So we've covered income tax, unemployment fund, workman's comp. What else?
Well, then you get to your next level. Once you're employing staff so your company's running now you can really afford to pay them well.
Yes.
You've driven every little bit of blood out of them.
Right.
So now you can afford to pay them.
Right.
So now you have to register for pay as you earn. And that registration takes place at SARS.
Okay.
So very much like income tax, you now register at your income tax authority for actual pay as you earn. Fortunately, what it does do is that your UIF now can be paid through your SARS payment.
Right.
So that's quite important, because had you not registered for income tax, for actual
UIF, yes.
when you did register for pay as you earn, and you paid the money over to SARS effectively, that money just sits there like an escrow, and they never know when to pay it over because they can't allocate it to your actual account.
Okay.
So that's really where you start. So now
So you're saying there's a link between registering for UIF and registering for PAYE?
100%.
Okay.
Yeah, because
Okay.
effectively, how our tax system has been built is we're streamlining everything. It's pretty much the way the whole world is going, that we want a simple sort of approach to doing stuff. So we've got one portal, very much like this. You can go to one place, learn about everything.
Yes.
And taxes are doing the same thing.
Yes.
You go to one place, pay all your taxes, providing you've now registered at all the various organizations. That money then just gets spread out, to them.
Tyrone, let me ask you a question about registering for pay as you earn. So now the business owner, let's use myself as an example. We said earlier on that the company is responsible for income tax as well as the individual. I now register for pay as you earn. What type of advice would you give? What is the best way to structure as a business owner in terms of being a salaried employee, or mixing that up with salary and dividends? What would be the best advice?
Well, there's what the tax authorities will tell you, and there's what you are actually and allowed to do.
Right.
So effectively what we try to do is, SARS in our income tax law have broken down, if you get dividends only, but it's really a payment for doing your day-to-day job, they view it as a salary.
Right.
So you'll be taxed on it as if it is an income.
At your normal tax rate.
At your normal tax rate.
Right.
So what you should be doing is you should have a structure where you're earning an income, and you can vary that according to what suits you, what suits your actual firm, and then you pay yourself a dividend, like to pay out the actual rest of the funds.
Okay.
So providing you're earning something for your job that you're doing, and as long as it fits into the marketplace, the rest you pay out by dividends.
Right.
But that's really a more sort of structured sort of topic you'll deal with when you're sitting with your tax advisor.
Right.
Because it really suits your type of industry,
Yes.
your type of lifestyle.
Yes.
And it might not suit everyone.
Yes. So what you're saying is make sure you stay above board in terms of what the tax authority requires, but there are ways of structuring that actual remuneration for the business owner.
100%.
Okay.
100%.
Okay. What about skills development levies?
Essentially, that's one of those sort of often confused elements.
Yes.
A lot of people think they've got to pay the skills and development heavy straight away.
Yeah.
In fact, it's not really the case. You only have to pay it over once your actual payroll exceeds 500,000 Rand a year.
Wow.
So if you're a startup company, and all your staff are earning whatever they're earning, and providing your total payroll is under 500,000 Rand a year, you don't have to pay SDL. So it's not
That is really new information for me as well. I really was not aware of that.
No, absolutely. A lot of people aren't. They just sort of accept, there it is on the form, they tick it, and off they go.
Okay.
So effectively, you don't have to register again. Once you exceed the threshold, on your normal payment structure, you just calculate it in and you pay it over.
Okay.
There's no new forms to have to do and stuff like that.
Okay. And then the dreaded VAT. Please help me with understanding the dreaded VAT.
Okay, VAT is one of those things, and it's purposely lost on our little slide,
Right.
because you only have to register for VAT once your turnover exceeds 1 million Rand.
And just to interrupt you, there may be different requirements or levels for different countries, but in this case, we're talking about 1 million Rand.
Yes, in
Okay.
SA. So what you'll find is people think, 1 million Rand, of course I'm actually going to do that. But that's 83,000 Rand a month,
Yes.
effectively. Just to give you an idea, so a lot of the smaller guys, hold off, don't register just yet. Start making money first, then you can actually go through the process of actually registering. So those are the main sort of forms that you have to register, and I'll get to what you're going to ask me. I want to, just before I touch on that,
Right.
just explain the forms that people understand. What our tax law has done is separate the sort of legal and requirements around these forms.
Right.
Often, we need to know if we don't. Often people don't have the money to pay their VAT or their pay-as-you-earn. They don't actually submit the forms, and that's very wrong, because what they've done is that's a criminal offence.
Yes.
So the tax authority can come and actually arrest you. It's really just to force you to put in the forms.
Now, I've shared this in a previous module. I'm frightened of policemen. So I want to make sure I understand what you're saying. You're saying that if you don't have the finances to perhaps pay, make sure you submit the form.
100%, yes.
Okay.
Yes, because what they've done is there's the separation. One is a criminal offence, and effectively why they've done it is so that they can come and fetch you,
Yes.
march you down to the office, force you to fill out the forms, and then they effectively let you go.
Right.
The other side of the coin is, obviously, you put the forms in, but you haven't got the money. That's a civil offence. SARS will then use all the various methods to help you pay it off over time, and failing which they would then take the actual legal course, and that's a civil case, and then they'll claim assets and so on and so forth.
So that brings me to another question then. Very often, we have, as small businesses, and I'm speaking South Africa specifically, this may differ in some other countries, but the minute I invoice you for the shoes I'm going to sell you, right, that specific VAT, I'm liable to SARS.
Correct.
Now, you may not pay me for 90 or 120 days. Regardless of that, I need to pay the money over to the
taxman, 100%. To take that example and to extend on your earlier question,
Yes.
VAT is not really that hard when you understand it. So effectively, you're only paying over the difference between what you invoice your clients
Right.
for VAT and what you yourself have been invoiced for VAT. So in most organizations, you're probably paying around about 7 to 10% VAT over.
Yes.
It'll vary from different industries.
Yes.
Like in our case, we sell time.
Yes.
We have very few costs of sales, so we tend to pay over a higher portion of that. In other industries where it's manufacturing, where there are lots of cost of sales, they're buying lots of things, they then obviously claim all that VAT against the actual payment. So they're only paying over 5 or 6%
Yes.
of the actual VAT.
Yes.
So they've got the number of 14 in their head,
Yes.
and it varies from country to country, but I think most of them have standard around 17, 14, around about there.
That's right.
So that's really what's happened. That's the sort of crux of it. We're only paying over the difference between what I've invoiced less what I have been invoiced by my actual suppliers.
I understand. I still want to know if you have advice for if you're in a services organization, you've not yet received your money from your actual client, but you have to pay the tax man. What would you recommend to small businesses? How do they navigate that?
Okay, what the legal framework is that you have to pay your VAT is liable the minute you receive the money, or you invoice your client, whichever comes first. So in your case, if you've invoiced your client, you are then liable for that in that cycle. If you now haven't invoiced your client, and I just know I like those shoes, and I pay you straight away, knowing I'm only going to get them in a month's time, you're liable for that.
Right.
So what we often advise clients is that you do a pro forma invoice. So now the client knows what they owe. Yes, they're only going to pay you in 60 days, and then you issue them an invoice.
And then on a pro forma invoice, you won't be liable for that?
No.
That's really great advice, Tyrone.
You haven't actually invoiced them for something. It's really more of a formalized quote as such. But the minute you receive the money, then you've obviously you're liable.
So that's really great advice from Tyrone, specifically where we may have some clients who pay on 60 days or 90 days, that we then go the pro forma invoice route, and then once you receive the money, you're liable for that you raise the invoice.
Exactly.
Fantastic.
Yeah. And there obviously are various ways, but depending on your industry, we can obviously structure, and on that, while we're on it, it is quite a topical sort of good conversation, because as you've said, a lot of people don't really understand it.
Yes.
Often you don't have to wait until you've turned over R1 million to actually register.
Right.
And a lot of people think, well, why would I even register if I haven't turned over R1 million?
Yes.
In some cases, it does suit your industry. For example, you don't charge VAT if you export. So you might be manufacturing your shoes locally and exporting them into all over the world, into Africa, around the world.
Yes.
You're not charging VAT on those sales.
Right.
But you can claim the VAT locally on the goods you've purchased locally.
Right.
So then instead of you paying money over to SARS, you're actually receiving money.
Wow.
And that's a great cash flow to cash flow your industry.
Right.
And actually cash
so
flow your
actually, you've just redeemed the taxman somewhat. So although it swings and roundabouts, right? So the exporters will benefit from this, and we will wait our turn. I understand.
I have to give our taxman his due, and I don't say it with a bad heart or anything, but the tax authorities have really changed their tune, and they're really trying to help SMEs.
Yes.
They'll listen. There's not the old tax authorities of old where they try to close down your organization.
Yes.
They're actually working hand in hand with people, making it work.
Yes.
So, follow the rules. There are lots of ways within the rules that you can minimize your actual taxes.
Yes.
You don't have to go breaking them, and it just makes life easier.
Yes. Makes perfect sense to me. So I know that there are a number of documents to submit. And again, I'm asking as an SME who wants to learn about this. In fact, I panic if I have to think about what I'll do without the accountant who's helping me, because I really am not familiar with what actually happens behind the scenes. I give the accountant my box of slips every month, and he miraculously makes things work, right? Talk to us about the statutory documents to be submitted.
Well, as you've seen, we just run through the 6 types of registrations that will take place.
Yes.
So often, as you say yourself, you think, well, there's 6 types of registrations. Why is an accountant charging me so much money?
Yes.
But if you break them down, your income tax alone is 3 forms a year. So there's a form in each 6 months, and then you do your final taxes at the end of the period.
Right.
UIF, there's 12 forms, 1 for every month that has to go in.
Wow.
And people often don't actually think about it. Workman's compensation, there's only 1 form every year, fortunately.
Right.
Nowadays, you can do a lot of these online, so it does make it easier.
Yes.
Pay as you earn, 14 forms. 1 for each month, and then half year you do a reconciliation of the first 6 months, and then at the end of the year you do a reconciliation again of the last 6 months. So this just gives you some idea. The SDL, fortunately, is already taken care of in your pay-as-you-earn form, so no more forms there, thankfully.
Yes.
And then VAT. VAT has 6 forms, 1 every 2nd month.
Yes.
If you're a larger firm and you're turning over 30 million rand a year, that's a form every month. So just for our SME clients, that's the 36 forms a year.
That's incredible. So what do we do now if the SME truly cannot afford an accountant? How do they navigate that?
It's incredibly difficult. It is incredibly difficult. I know the tax authorities are looking at single form approaches. There are different types of tax models, but it's really, really difficult because you've got to look on both sides. There's the sort of real tight headlines in the law that actually require many, many things from you, plus all these forms. When are you going to get time to do any work?
That's right.
Where are you going to make the money to pay all these things?
That's right.
So it's a tough one, and I know they're spending a lot of time working on it. And there's always the cost that comes up, the cost we're paying to submit these forms.
Yes.
So, and unfortunately, and accountants have studied long and hard.
Yeah.
They want to earn a fee, but how do they? It's tough.
Yeah. So I'm clearly hearing from you. These are legal requirements. As SMEs, we're not going to get away from it. We have to comply. So for me, the accountant fee, whether it's in-house or from the outside, is a sunk cost I need to budget.
Yes, that's right. However, it should also save you money. Your accountant should be giving you good advice on what you can write off, because there are obviously elements which we'll discuss.
Yes.
But it shouldn't never be seen as just the sunk cost that I'm getting no benefit.
Right.
It's really got to be a two-way street where, it's really an element of trust.
Right.
You're telling someone your deepest, darkest secrets.
Yes.
And they are then taking care of it.
Yes.
So, and that obviously has a cost.
Of course.
Associated. I mean, you wouldn't be telling your secrets to strangers.
Of course. I think you've just also redeemed the accountants, right? Okay.
I'll
great.
be sending my invoice later to all of them.
Okay. So I have a clearer understanding of the statutory documents that need to be submitted, and it's a heavy administrative burden.
Absolutely.
Yeah.
It is indeed.
Okay.
Yeah.
So the other question I wanted to ask, there are obviously other registrations, right? You've just given us all those numbers of forms to be submitted. What other registrations do we have to be aware of?
Well, there are quite a few out there. The initial ones we went through, that's generally what your accountant would actually sort of focus on.
Right.
Because that's the laws that they have to think about and actually apply to.
Yes.
We take a broader view in our firm, so we're looking at more your entire company, how it interacts in the marketplace and stuff. So the other forms that we look at are things like annual and returns.
Yeah.
People often confuse this with your income tax and return, but what the annual and return is, when you register your entity at the CIPC, each year on its anniversary, you have to submit an annual and return to prove that you actually are operating.
Still operating,
so
yes.
You pay a small fee, submit your turnover numbers,
right.
And they then tick a little box, okay, this firm is still actually operating.
Taryn, this is important. So are you saying that if you don't pay that fee, what happens? Do they deregister you at some point?
Absolutely. They're in that process now, in fact, because we had upwards of 800,000 CCs at one stage at the actual CIPC, of which we probably can say about 650,000 never actually traded.
Right.
But they were sitting on the system. So now they're busy cleaning up their database, and obviously they're talking with SARS because there's tax implications and stuff like that. So it's very, very important.
Okay.
If you don't pay that fee, they do actually deregister you.
Right.
And that means that you, the company owner, now become liable for any debts and lawsuits against the actual company.
Wow.
So it's quite a good thing to keep that good corporate veil up.
Okay. So important point from Tyron is that there's an annual return cost that we as small businesses have to pay, and this is separate from the annual return tax that we do.
Correct.
Right. What else?
Well, then we'll move on to the other things that are mostly an SA thing, I suppose, in some ways. We have our BE certification, very, very important. We have obviously our transition. We're looking at BE, and employment and stuff like that.
Yes.
So a lot of the smaller companies will need to get a BE certification. And that's quite important.
And just for those viewers who are maybe not from South Africa, BEE stands for Black Economic Empowerment. It's an initiative within South Africa since 1994, legislated 2003, if I remember correctly. So it's country specific.
Well, funny enough, not really. Singapore had a similar similar issue.
Really?
Theirs obviously was not BE.
Yes.
But a lot of the Chinese individuals owned a lot of the firms.
Oh,
and the
that's
government ran a similar program to get the Singaporeans into owning
That's
their
very
own
interesting.
firms.
I know Malaysia also had a similar thing.
Yeah.
Right.
So it is a used mechanism.
Right.
We obviously have it here, and it's showing things are working, and a lot more sort of enterprises are actually growing.
Yes.
So you don't have to have it. People think it's a law that you have to have a BE certification.
Yes.
You don't have to. Only the larger corporates and the government has to do it.
Right.
The smaller traders, if they're not trading with any of the large firms, it's fine, leave it. If your client is the end user, they're hardly going to ask you for a BE certification.
Yes.
So
Okay,
you
great.
don't have to do
What
that.
else?
The dreaded tax clearance.
Right.
I'm not too. I'm sure the States runs it.
Yeah.
But definitely in SA, it was introduced because of the amount of tax fraud taking place in SA.
Right.
We've all heard of the terms, tenderpreneurs.
That's right.
And things like that. What was happening is a lot of people were getting contracts via the government and effectively being paid with our tax money. And the government was saying, hold on a minute. I'm paying you with tax money, yet you're not paying your actual taxes.
Yes.
We don't think you should benefit from that.
Right.
So prove to us that your tax
Taxes are in order. Yes.
and therefore we can actually pay you someone else's hard-earned tax. And that's where the process started.
Right.
And it runs incredibly well, so we know anyone who deals with the government has to have a tax clearance, and then we just take it from there. I was going to say, there's obviously the ways people are skirting the system, but that's a legal issue.
And really, speaking from personal experience, to get a tax clearance, there's a process to follow. It doesn't take long. It really just shows that your taxes are in order, and if your taxes are in order, you have your tax clearance. What about the PAIA manual?
PAIA manual is one of those small business sort of millstones that really we don't need. After introducing it, the government realized that smaller firms need not really, they don't really need it as such. So they've kind of pushed out the legislation to December 2015 for the smaller firms.
Right.
However, it's lurking in the background, so be aware that it does exist. It falls under the Human Rights Commission.
Right.
So what it really is doing is the public access to the information. So any member of public can come to your organization and demand information about it.
Right.
And it sort of just guides how that information must be asked for, how you hand it over, what costs are involved, and things like that.
Right.
So it's really...
So something we need to watch for on the horizon, right?
100%,
Okay.
yes. 100%.
And then employment equity, very specific to South Africa. You maybe just have a sentence or two about that?
Absolutely. Based on our past, we want to obviously and redress the actual employment equity. So it's just making sure that larger firms are employing right across the actual race groups in SA, giving everyone an opportunity and things like that.
Fabulous. So not just an easy ride, right? There are loads of registrations, loads of additional things that the SME has to think about when they're starting their business.
And as you say, what happens at the start is that we sort of run out the front door, make money, and later on we find out we haven't done anything. So
that's right.
It's always good to speak to someone, get all the stuff in place when you need it, and be aware of it, and then just take it from there. And, the information is available. In fact, SARS's website is fantastic. I would actually recommend anyone wanting to start a business, pop onto the SARS site.
That's right.
They're the guys who make the rules. Best place to go see.
That's right. And that's great advice for any other country. Go onto your local tax authority website. They would have good information that you can access on what to do. I've thoroughly enjoyed this conversation, I must be honest. When I saw we talking about legal statutory stuff today, I thought, oh my goodness, it's going to be an interesting one to navigate. But thank you very much, Tyron. I've really enjoyed it until the next module.
Thank you very much.
Thank you.
Yeah.